In this episode, we speak with the CEO and co-founder of SellersFi, Ricardo Pero. SellersFi is a global financial technology company that aims to empower e-commerce merchants looking to grow. This is done through inventory and marketing, product launches, and international expansion, and more. Founded in 2017, Ricardo has led SellersFi through offering his 25-plus years of experience in corporate treasury, wealth, and asset management. Ricardo is an investor and advisor to companies in the US and LatAm, as well as a former director in leading financial institutions such as JPMorgan, Citigroup, and Merrill Lynch. He previously founded OneLink Capital Partners. I'm your host, RJ Lumba. We hope you enjoyed the show. If you liked the episode, click to follow.
RJ Lumba is the executive chairman of Market Insight Media and the managing partner of GrowthCap. He is the host of Great Entrepreneurs, a podcast for driven entrepreneurs and business owners. Our podcast covers all topics related to the entrepreneurial journey, from ideation to execution to optimization and to reaping the rewards of a well-run business. In the minutes ahead, we'll share with you unique insights and tactics from some of today's most accomplished and inspiring entrepreneurs.
Ricardo, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Well, thank you for having me. It's a pleasure to be here.
You play in a very interesting space in e-commerce. So much is happening in e-commerce with its continued growth, particularly among individual businesses. You fit in on the FinTech side, on the financing side. Can you tell us a little bit more about the solutions you provide within e-commerce?
Yeah, sure. That answer kind of changed throughout time. I mean, we've been in business for almost 7 years now. And as you probably know, we started as a lending platform. And the company has evolved so much, especially like in post-COVID in the last 4 or 5 years. We provide a number of financial solutions to our customers, working capital being the leading product, but we offer banking services like business checking accounts, savings accounts. We're about to launch our card program. We have a dashboard that helps our clients to look at the financial performance of their stores. That dashboard is for free. It's just a way for us to support our clients in making better decisions about the financial health of their business. So it's kind of an evolving team here internally. We are very proud of the partnerships and clients that we serve. If you look at what we accomplished so far, we work with almost 5,000 customers today. And this is just growing. It's just the start of the journey because we have secured so many meaningful partnerships. And the most recent one was with Amazon. We have a great relationship with them. And last year, we secured a partnership with Citi, Mitsubishi Bank, also Mitsubishi Innovation Partners, looking for ways to expand internationally as well. So great things coming our way.
Fantastic. What's the primary solution or draw to SellersFi for a customer? Why do they first kind of start working with you?
Mainly, they come to us looking for a working capital solution. And the way we differentiate ourselves from our competitors, we don't believe there is a one-size-fits-all solution. So we have products that are tailored to smaller merchants. We have products that are tailored to international merchants set in the US and so on. So I would say working capital is the leading source of business for us. But then we have the ability to tailor the solution depending on the merchant profile.
And when you decided to layer in kind of other banking solutions, was that also partnering with a financial institution or a set of financial institutions? So you're effectively doing lead gen, but facilitating the relationship?
Yes, in a sense, we decided to stay within our niche. I mean, it's a huge niche, e-commerce, but if you look back, some of our old competitors, and I usually trace our starting the business years ago, I kind of compare ourselves with what Cabbage did. Mm-hmm. Cabbage started lending to eBay sellers. And then at some point, they decided to diversify across different industries because they needed to scale faster. We took a different approach. We decided to keep focus on e-commerce, and instead of diversify across different industries, we are diversifying our product offering. So we became like a specialized in providing solutions to e-commerce companies. And that's kind of a path that I see us moving forward.
One might think that it may not be the most stable client set, meaning it's fairly easy to get into e-commerce. And those needing capital might contact SellersFi and say, can you extend me some runway and provide some capital? But they may not be able to survive because, consumers are fickle and they could
Yeah.
just evaporate. So how do you manage through that in terms of your quote unquote loan portfolio or lending activities?
Like I said, we have a very flexible approach. We have products that are tailored to smaller merchants, the ones that are just beginning. And then we have a different set of products for the larger ones. If we had just one product, I would be concerned, but given the flexibility that we offer and the diverse product set that we have, it becomes easier. And it's a plain simple approach, let's say, to what we do. I don't think you would question that the growth of e-commerce and online sales will always outpace brick and mortar retailer growth. This is a secular trend. There might be a high mortality rate with smaller sellers, smaller merchants, but once that merchants establish themselves at a certain level, they tend to prosper. If you look at the growth rate of our clients, it's more than double the average growth rate of e-commerce in the US.
Mm-hmm.
And there's a reason for that. I mean, we work with high quality clients, and even the smaller ones tend to grow with us. I mean, the mortality rate that we see is probably lower than some of our competitors see.
So is it that compared to your competitors, you're able to maybe structure terms around a loan that ensure that you're establishing a really good relationship with your customer, that they can use that loan and not be overly concerned about really high interest, which would put them into the ground?
I think it's a factor of how we see ourselves in the lives of our clients. We don't see ourselves as a lender. We see ourselves as a long-term partner.
Mm-hmm.
We put clients' interest first. So we see competitors taking a more aggressive approach in terms of offering terms like short-term terms that asphyxiate the cash flow of a company. We look at how much the company can afford. That's like the foundation of our underwriting model. We look at how much the company can afford, and then from there, we build the solution, not the other way around. Not how much I can lend, and I don't care about what happens, I just want my money back. It's a different mindset, and I would say it has been working for us. I mean, you see a very resilient client base with high renewal rates and clients that have been working with us for like 4, 5, 6 years.
Yeah, that's fantastic. And let's talk about your journey, because you haven't always been an entrepreneur, or maybe you were showing signs of it early on, but I think you work for financial institutions. Is that correct?
Yeah, I mean, my parents and my grandparents, they built businesses themselves. And I always joke that I learn more with other people's mistakes than good examples. So like I lost my dad when I was like 19 years old. So I always had that will to build my own thing, but I immediately changed my college to take night classes, and I found myself a full-time job. And I moved to the US in 2000. I did my MBA at Columbia University, studying at night and weekends and working full-time during the day. So this is kind of a recurring thing for me. And I needed to build a safety nest to be ready to start my own thing. And I spent almost 20 years, like 17, 18 years working for big financial institutions here in the US. I started in Brazil with Citi and moved here to the US. And it was interesting because I was exposed to so many areas of the banks that I work with. And that helped me think through the process. And when I left JPMorgan in 2016, I didn't know what to do. The one thing that I knew is that I wanted to build something new, something where I could leverage my experience, but also be challenged to recycle some ideas and be challenged to something new. I mean, after you work for so many years in like kind of one sector or one line of business, things start to get boring, right? And coming to work with e-commerce sellers and building this business, I don't see ourselves as a traditional lending company. Every time that I go and talk to an investor, I said, oh, you can look at the numbers, but after you look at the numbers, I want to show you we're proud of them. And I want to show you the digital experience our clients have, the embedded financial solutions that we are offering to a marketplace or a financial partner. And that will give you the true sense of what we are. And that's nothing compared to what I experienced back then.
No, I love this concept. Something you said a little bit ago about really thinking about the customer and how to help them for the long term. That's not typically what you hear in financial services or fintech. And where do you think you developed that mindset? You know, one could say that isn't driven by capitalism, because if you do well by the customer, you'll be a good business. But, you know, in some cases, there's others that approach it from an empathy standpoint, and there's some altruism there. What compelled you to kind of go along that philosophy?
Maybe learning from other people's mistakes like that. I remember a few episodes during the past 7 years when talking to investors, when talking to friends that work in the financial industry, questioning me why we didn't diversify into other industries, why we didn't open this or that. And I said, there is always this very short-term view that you need to grow no matter what and go through those phases like seed round, Series A, Series B, blah, blah, blah. And then you need to plan for an M&A or go public. These things take time, right? But it's not a recipe that fits all, you know? I remember the first time that I approached a credit fund. They look at me and said, oh, you have low losses, but we want to wait for you to reach $100 million in volume. Then we reached $100 million. And I went back to the credit fund. Oh, no, but you didn't experience a negative credit cycle. And there was always something, right? And we kept our heads down, doing the work, believing in investing in our technology, investing in our credit models, and automating as much as we could, trying to be a lean company, efficient, partnering with clients. And then you look back after 7 years, we scale, we disburse over $1 billion. We are still in this like challenging credit cycle, and rates went up all the way. And for e-commerce companies was even worse, because e-commerce companies, our clients, they benefit from a boom in 2020, 2021. By the end of 2021, they were still facing issues with logistics and transportation. Transportation costs went all the way up, storage costs went all the way up, and they had to deal with that crisis for the bulk of 2022. And then 2022, you see the Fed starting raising rates. So it was transportation crisis and then like a mini financial crisis where cost of capital went up. So it was a tough credit cycle. And for e-commerce, it was especially tough because you're coming out of a transportation crisis. And we survived, and we kept our head on the game, and we saw some of our competitors changing their business models, some others discontinuing their businesses or being acquired for cents on the dollar. And we kept proving that that approach of focusing on the long term, being specialized, pays off.
You know, I think one thing that can be very different from working in a financial institution to becoming an entrepreneur is that you're then responsible for building an organization and a culture, and you're servicing a much different client base. So, how did you go about doing that? Do you have some key tenets about how you want to build a culture, how you want to build an organization?
We have a very open door approach here. If you talk to our team, they will agree that myself and Fabio, my co-founder, we work the longest hours than anybody else. We lead by example and we roll up our sleeves. We don't believe in not being committed to be on the trenches with the team. We have a very personal approach and how we deal with the team too. We have a very diversified team. We're coming from different backgrounds. We have a strong presence in LatAm. We have a big team in LatAm. We have a lot of remote workers, but there is this international aspect of the team. We have people from LatAm, we have people from China, India, Europe, you name it. Of course, US, but so that diversity and that open door approach, I think that creates a bonding and a commitment that it's hard to find someplace else. Mm-hmm. We have a very low voluntary churn in the team. I would say less than 5%. And honestly, I'm extremely proud of what we build, the culture that we have in the company, and the level of satisfaction and commitment that the team has. Over 70% of our employees have stock options in the business. So there is this sense of ownership and commitment that is hard to find someplace else.
And what's the next big milestone you have in your sights? And I guess it could be 2 years out, 3 years out, 5 years out. Is there kind of some key vision in your head that you are always aiming towards?
I'll give you a short term and then a medium to long term. We joke here that long term here is after anything beyond 6 months. But all jokes aside, our short term, it's a milestone and a challenge in a certain way. We are making strides, and that started with the rebranding, moving from Sellers Funding to SellersFi, is to change the mindset of our team and the perception that our clients have about us. We are not a lending company. We are a financial platform that have strong working capital solutions. So working capital remains our lead product, but we provide other solutions, right? And we are launching this full banking platform. We are upgrading our card program, and we are expanding services and the scope of our business in that sense. So that's kind of the first milestone and challenge for us, to change that perception, the client's perception, and to change the mindset that the team has. When you look long term, we just announced this relationship with Amazon last January. We have a full alignment of interest. It's amazing to see a company like Amazon so committed to serve their sellers in the financial services space. They're opening the door for us to partner with them. And we have great aspirations with that partnership, with that relationship. So we are in the US, we are launching Canada in a couple of months. I wouldn't be surprised if we expand beyond these two countries and offer also different type of financial solutions to that client base. In a sense, that's how I build, and probably this is in my former Citi and JPMorgan DNA, thinking globally. And e-commerce is a global industry, right? So we have clients from all over the world, and e-commerce has no barriers, and we need to think that way. Mm-hmm. So being more global, more diversified is key. And it's something that I look forward to see the company evolve into.
Last two questions. One is, can you tell us about a person who has had a profound influence on you?
Probably my grandpa. And, my wife wrote 2 books, and she keeps coming up with ideas of books that she wants to write. And I remember my grandfather telling me that one day I would write a book about my childhood in his farm. I don't know if I have the strength, but he taught me so much. And my dad also had the same mindset of the way he treated people. And I remember my dad's funeral. We had like 500 people attending his funeral. And I saw billionaires, and I saw, like, my dad used to play tennis, and I saw the guys who catch the ball during the tennis match. I saw kids attending that because he treated everybody the same. Mm-hmm. So, like both my grandpa and my dad, because of that example that they gave me.
That's amazing. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
I would love to do more. As you know, I am originally from Brazil, and one day I'll have more time and more money to contribute in a more meaningful way. I see an amazing opportunity for us to invest in education for underprivileged children in emerging markets, not only Brazil, but everywhere. And this is something that if I had to invest, because we are investing in people's futures.
Mm-hmm.
I mean, highly educated people will bring us more positive things to society. And that's what I'm passionate about.
Well, Ricardo, I want to thank you again for taking the time. This has been a wonderful conversation.
Thank you very much.